Hi friends, welcome to the channel JIB and CIB Made Simple. In this particular video, we are going to cover our IIBF MSME, that is Micro, Small and Medium Enterprise, a memory based question which appeared on 8th November 2025. So you will be able to see which type of question are being appearing in the examination most repeatedly, and the topic will surely help you in the upcoming examination. So let's get started with our very first question. The question is, under the Limited Liability Partnership Act 2008, which of the following statement best illustrate the hybrid nature of an LLP and its divergence from traditional partnership? Option they have mentioned, like an LLP required minimum of 2 partners with a maximum cap of 50, ensuring it remain a small scale entity under resource dependency theory. Option B, all the partners in an LLP must be resident of India to maintain separate legal entity status and perpetual succession. Option C, it combines the operational autonomy of a partnership with a special legal entity where partner personal assets are protected from business liability. Option D, the liability of DP is unlimited to mitigate agency risk, while general partner enjoy limited. So friends, let's look at the option number A. So first of all, let's understand the question, what the question is all about. Let's first understand that. So the question is asking why LLP is called a hybrid entity and how it is different from traditional partnership. So focus on the keywords. The two keywords they have mentioned is the hybrid entity and the how LLP is different from divergence from traditional partnership. So first of all, what is LLP? First of all, let's understand the core concept. So you know it very well that a limited liability partnership is called hybrid. Why it is called hybrid? Because it mixes feature of two business form. It mixes feature of partnership, right? So partnership have flexibility. P as a hybrid. So it is called hybrid because it mixes feature of two business form. On one side we have partnership. So for partnership it ensure flexibility, it give flexibility, it have internal management freedom. For partnership we have internal management freedom. While if you look at the company, so on the other side we have company have a separate legal entity. Company is a separate legal identity, right? And also limited liability get limited. So from partnership it get flexibility, from company it get separate legal identity. So LLP is neither a full partnership nor a full company, but a blend of both. That's why this is called hybrid. Now let's look at the option. Option number A says that minimum 2 partner and maximum 50 partner. So LLP does not require minimum 2 partner. That is wrong. But there is no. So yeah, LLP yes it require minimum 2 partner. Yes, minimum 2 partner is required, but there is no maximum cap. So it is not like that only 50 partners would be there in max. So that's why option number A is wrong. What about B? It says that all the partner must be resident of India. The LLP Act require only one DP to be a resident in India. This is a very important thing to remember regarding the LLP, because if you look at the examination pattern, one question is LLP is sure short. So I will not only cover those things which have been given in the option, I will cover something else also. So LLP should have only one DP designated partner to be resident in India, to be Indian resident, right? LLP to be have only one DP to be resident in India. So not all the partner. That's why option number B is also wrong. What about C? It combines the operational autonomy of a partnership with a separate legal entity of a company. Exactly. C is the correct one. This is 100% correct, because LLP works like a partnership when it has flexibility, when it has autonomy, and LLP has a separate legal entity also, which is different from partner. So partner personal assets are protected, right? Partner because company is a separate legal entity. Similarly, LLP is a separate legal entity. So partner personal assets are protected and liability is limited only up to agreed contribution. So this perfectly explains the hybrid nature. What about D? D says that designated partner have unlimited liability. You can see they have mentioned that designated partner have unlimited liability. What do you think? So this is wrong. In an LLP, all the partner, including designated partner, they have limited liability, because the full form itself says limited liability, right? Unlimited liability apply only in the case of fraud. So option D is incorrect. So this option number D is incorrect, right? So what we learned from this question, correct answer is option number C. So one trick to remember, let me give you a trick also, so you can remember it like this. LLP is equal to P plus C. P means partnership. P means partnership style working is there, plus C means company advantage is also there. So we have limited liability, which is the advantage of company, right? Limited liability plus separate entity, which is the separate entity. Limited liability plus separate entity, right? Combined together. So it works like a partnership, but it protect like a company. So what we learn is that, LLP is a separate legal entity. Partner's liability is limited to the contribution. No maximum limit on partner. Only one designated partner must be Indian resident. And LLP is a hybrid of partnership and company. That is what we learned from this question. Now, let's come to the question number 2. Question number 2 says, considering the interplay between the Indian Partnership Act and Companies Act, which of the following statement describe the constraint and theoretical rationale for membership limit in Indian partnership? So option A, Indian Partnership Act mandate a maximum of 50 partner to ensure that firm remain small enough to be managed under agency theory. Option B, while the 1932 Act is silent on upper limit, a cap of 50 is imposed by the Companies Act via Rule 10 to prevent unmanaged risk and to encourage a scalable entity to transition into corporate structure. Option C, all the forms of association for profit, including HUF and professional firm of chartered accountant, are strictly capped at 50 member. Option D, partnership are capped at 50 member primarily to ensure that they have enough resource to complete and with a large company under resource dependency theory. So this question is testing two things. Which law fixes the maximum number of partner in Indian partnership? Right, which law fixes? For answering this question, let me take you to our certificate course on MSME. If you are looking for only one single course where you get entire complete discussion regarding the theory, regarding the MCQs, you can check out our course on certification course on MSME. In this course, you get unit-wise theory and MCQ PDF, which is compiled module-wise A, B, C, D, E, F. And inside each module, you get unit-wise folder like this. Inside each unit-wise folder, you get theory PDF and MCQs PDF. And it cover all the important concept as per your Macmillan book, as per your reference book suggested by IIBF. In addition to that, we have previous year question paper also, which we have collected from memory based question from as aspirant who have appeared in the examination. Plus, we have some quick revision PDF also for last this particular number also. Now let's come back to this question. So friends, first of all, this question is testing two things: which law fixes the maximum number of partner and why this limit exists. So first of all, let's have a basic legal understanding. So you know it very well that if we talk about the Indian Partnership Act, right? So Indian Partnership Act 1932, right? So this act, it tells that minimum partner is 2, but it does not mention any maximum limit. So the maximum of 50 partner it actually comes from, section number 464 of the Companies Act. It tells that the maximum number of partners should be 50, and also the Rule 10 of the Companies Act. So legally, Partnership Act is silent and the Companies Act set the cap. Now let's look at the option. Option number A, it says that 1932 Act mandate a maximum of 50 partner. No, it is wrong. Actually, 1932 Act never fixes the maximum number. This limit comes from the Companies Act. Option B is the correct one. Yes, while 1932 Act is silent on the upper limit, the Companies Act impose a cap of 50 to control risk and push a scaling firm to become companies. Yes, option number B is the correct one. This option is legally and theoretically perfect because correct law is identified, correct reasoning has been explained, large businesses are encouraged to convert into company structure, enjoy better governance and investor protection. What about C? C says that all the profit-making organizations including HUF and professional are capped. Actually, it is wrong. Why? Because exception is there for HUF business. Exception is there for some professional firms like, CA, for lawyer. So these are governed by a special statute. Right. So they are governed by a special statute. So option C is wrong. What about option D? Option D says that cap ensure enough resources to compete with big company. Actually, opposite logic is there. The cap exists to prevent the mismanagement, avoid agency problem, maintain a small scale flexibility. So the final answer is option number B. So what we learned is that silent P but a strict C. Silent P but a strict C, which means Partnership Act is silent on maximum and Companies Act is cap as 50. So the key learning is that what is the minimum number? So minimum number is how much? Minimum partner is 2. Maximum partner is how much? 50. Section number 464 plus rule number 10, it set the limit. The purpose is to reduce the agency risk, to avoid unwieldy management and to encourage the corporate structure. Let's have a look at the question number 3. Question number 3 is about the liquidity analysis. So basically, a tech startup has the following balances at the end of the financial year. Current year is 12 lakh rupees, and which include 4 lakh in inventory and 50,000 in prepaid insurance. Current liability is 5 lakh. Cash and cash equivalent is 1,50,000. So now you have to calculate the quick ratio and to evaluate the firm immediate working capital position related to the ideal standard. 4 options they have given, like quick ratio 2.4, quick ratio 1.5, quick ratio 0.3, quick ratio 1.6. And also option number A says that the firm significantly exceed the ideal 2:1 current ratio. B says that firm exceed the ideal 1:1 standard. C says firm is at risk as it fall below the 1:1 cash ratio requirement. And D says that firm is below the ideal 2:1 threshold. Very good question it is. So this question is not asking about current ratio, but about quick ratio. And you know what is the other name of quick ratio? So the other name of quick ratio is also called the acid test ratio. So sometimes question may be asked that what to calculate the acid test ratio. So both are the same. So the focus is on immediate liquidity. The focus is on ability to pay current liability without selling the inventory. Especially important for a startup where cash flow can be unstable. So some formula that we must know, that quick ratio is equal to quick asset upon current liability. And what is the quick asset? Quick asset is the current asset minus inventory, and also you need to subtract the prepaid expense. Now you may ask me why we have subtracted. Because inventory takes time to sell and prepaid expense are already paid and cannot be used to pay the liability because they have already paid. That's why we need to subtract these two. Now let's first compute the quick asset. So current asset is 12 lakh, 4 lakh is inventory, 50,000 is prepaid. So just write 12 lakh minus 4 lakh plus 0.5 lakh. So this become how much? This becomes 7.5 lakh. That is your quick asset. Now compute the quick ratio. Very simple to compute. Quick ratio is equal to quick asset upon current liability, which is equal to 7.5. And what is the current liability? 5 lakh. 7.5 upon 5, that give you 1.5. Now interpretation. What is the ideal quick ratio? You know it very well that ideally quick ratio should be 1:1. Ideally. It is just sufficient. And if it is greater than 1, it is a comfortable position. Comfortable position. And if it is less than 1, it means liquidity stress is there. So here 1.5 we got, which exceed 1. So this startup can easily meet immediate obligation. So no need to depend on selling inventory. So if you look at the option number A says no. 2.4 no. 1.5 yes. The firm exceeds the ideal 1:1 standard, indicating a strong immediate liquidity. Exactly. B is the correct one. Rest option are wrong. So what we learned from this discussion is that quick asset is equal to CA minus I minus P. Quick asset, CA means current asset, I means inventory, P means prepaid expense. And then you need to divide by current liability. No inventory, no prepaid, only real money is counted. And what is the ideal quick ratio? Ideal quick ratio is 1:1. Higher quick ratio, lower liquidity risk. See, simple thing is that if quick ratio increases, liquidity risk decreases. Right, please understand. Now have a look at the next question. MSME in the manufacturing sector report the following. Total debt is 45 lakh. Shareholder equity is 30 lakh. And earning before interest and tax EBIT is 12 lakh. Interest expense is 9 lakh. We have to compute the debt to equity ratio and the interest coverage ratio. According to the resource based theory of the solvency, is the firm long term funding sustainable? Some option they have given like DE 1.5, DE 0.67, DE 1.5. This way they have given the 4 option. Now let's see the basic. So this question combine number plus interpretation plus theory. We have to compute the DER. We have to compute the ICR, interest coverage ratio, and to decide whether the firm long-term funding is sustainable under the resource-based solvency theory. First of all, let's write the correct formula for DER. So DER formula is total debt and divided by shareholder equity. Total debt divided by shareholder equity. And what is ICR? ICR is EBIT upon interest expense. ICR is EBIT upon interest expense. So basically why we use EBIT? EBIT is used because interest is paid before the tax. Interest is paid before tax. That's why EBIT is used. So we compare earning before interest. Now let's first of all compute DER. How to compute DER? Debt they have given how much? You can see debt they have given 45 lakh. Equity they have given 30 lakh. So it is 45 upon 30, which is how much? Which is 1.5. So it means that for every 1 rupee of the equity, the firm uses 1.5 of the debt, indicating high dependency on the borrowed firm. Now let's compute the ICR. How to compute the ICR? ICR means, EBIT upon interest expense, right? So what is EBIT? EBIT also they have given 12 lakh. So 12 lakh in the numerator and interest expense 9 lakh in the denominator, which is equal to 1.33. So it means that the firm earned rupees 1.33 for every 1 rupee of the interest obligation, right? That is called interest obligation. The firm earned rupees 1.33 for every 1 rupee of the interest obligation. It means it can pay interest but with very little safety cushion, right? So what are the ideal coverage ratio? See, safe zone is 1.5. Above 1.5, safe zone. Below 1.5, risk zone. So what we are getting? We are getting 1.5 exactly. And below 1, it becomes danger zone. So now actually we are getting 1.33. So this is a risky zone. And what does this resource based theory of solvency say? This resource based theory of solvency says that a firm must generate sufficient internal resource not just to pay today's obligation but to withstand the shock and instability. Even though interest is covered, the margin of safety is very weak, making long-term funding unsustainable in adverse condition. Even though interest is covered, but margin of safety is very weak, making long-term funding unsustainable, right? So option number A says that D ratio 1.5 exactly, ICR is 1.33 exactly, firm is considered unstable. Yes. So A is correct. So please remember, debt divided by equity is DER, and EBIT must be at least 1.5 times the interest expense to sleep peacefully. No safety cushion, right? So what we learned? Debt equity ratio, so capital structure risk. Interest coverage ratio, so repayment risk. Ideal coverage is above 1.5 for ICR, interest coverage ratio. Please note
self-employment through micro enterprise implemented by KVIC when with eligibility requiring individual above 18 years. Option B says that PMEGP provide only loan with no subsidies and focus solely on agriculture employment generation. Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under other government scheme. Option D says that PMEG offer a flat 10% subsidy for project costing below 5 lakh regardless of the location or category. So these are the 4 options given here. Let's start with the option number 1. So let's look at option number 1. Option number 1 is correct. Yes, this one is correct. Why? Because PMEGP was created by combining 2 schemes, right? So there was first scheme was called PMRY. Okay, this PMRY was merged with, this is called Prime Minister Rozgar Yojana. It was merged with REGP, which we call Rural Employment Generation Program. And then after merging, this PMEGP is evolved. Okay, the idea is simple, to help the people. What was the idea? To help the people, right? And they start their own small business and micro enterprise, right? So this is the point. And who implemented? KVIC implemented, which is the Khadi and Village Industry Commission, with support from, so they get support from state office, right? They also get support from banks. Now eligibility, I told you should be above 18 years of age, minimum 18 years, right? 18 years of age, and should have minimum education required. So for example, suppose there is a 20, let me give you one example. Suppose there is a 20-year-old student, right? 20-year-old student with basic schooling. Now he want to open a tailoring unit, right? He want to open a tailoring unit, or he want to open a small service business, so they can apply under PMEGP. So these are the keyword point you must keep in the mind. Let's look at option number B. Option number B says that it provide only loan with no subsidy. That is wrong. PMEGP is not about agriculture. It's totally no, this is wrong. It is not about agriculture. It's about non-farm micro enterprise. Let me write it down. Right. It about non-farm micro enterprise. Non-farm micro enterprise. Right, like a small shop, workshop, or service unit. And it provides both loan and subsidy. Subsidy can range from 15% to 35% depending on the location and category of the beneficiary. So this option number B is completely misleading. What about C? Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under the other government scheme. So this is again wrong. Why? Because existing enterprise that already got subsidy from other government scheme, they are not eligible. PMEGP is only for, remember, it is only for new project. See, I'm writing these things are very, very important. Remember, this is only for new project. Okay. For example, if someone already took a subsidy under Mudra Yojana, they cannot come again and claim under PMEGP for the same unit. right? What about option D? Option D says that it offer a flat 10% subsidy for project costing below 5 lakh regardless of location or category. So this is also wrong. You know, subsidy is not flat 10%. It changes depending on whether the person is from general category or from a special category like SC, ST, women, differentially able. So subsidy can range from 15% to 35%. Right, so let's take the quick summary of what we have discussed here. So this is all about, you know, PMEGP. So it is a merger of two schemes, PMRY and REGP. First point. Second point is, you know, that focus is to create self-employment. That is the focus. What is the focus? Focus is for creating the self-employment. Then I told you it is implemented by KVIC plus bank. Eligibility is more than equal to 18 years, right? Plus minimum education. Project limit is 25 lakh. This question is also asked. What is the limit? 25 lakh manufacturing and 10 lakh for services. This limit is also been asked. Remember, project limit is 25 lakh for manufacturing and 10 lakh for services, and subsidy range from 15 to 35%. This range depending on the location and category. An existing unit with subsidy not eligible for it. So friend, always remember this point that, you know, PMEGP is for new small businesses, right? It is for new small businesses in non-farm area, helping youth and artisan to become self-employed. That is what PMEGP is all about. Everything has been written here and I have summarized all the things. If you think that this content is useful for your preparation, please hit the like button. This will motivate me to make more such as content. Also, you can share the content with your colleague who are preparing for this examination. It will be quite beneficial for them also. For your information, let me tell you that if you want to prepare, if you want to practice some quizzes based on MSME, you can join our Telegram channel. In the description section of the video, you will get the Telegram channel. You can join the Telegram and attempt many quizzes which are completely free of cost. Now friends, let's look at the next question. So what was the primary objective of the Pradhan Mantri Task Force? Yeah, this is a very good question. Pradhan Mantri Task Force constituted for the MSME sector development. What was the primary objective? Option A, to promote export of MSME product through international marketing agency. Option B, to reflect on issues raised by MSME association and formulate a comprehensive agenda for action. Option C, to develop policies solely focused on labor law reform in the MSME sector. Option D, to provide direct financing assistance to MSME without any structural reform. Very good question it is. So let's discuss this particular question. Let's look at option number A. So if you look at option number A, this is too much narrow. Export are important, but the task force was not made just for export. It has a much bigger agenda. The agenda was much bigger. Not only marketing, but also credit, labor, infrastructure, skill development. So export was only one small part, not the full object. Option number B, yes, this one is the correct one. Because the task force was formed after the Prime Minister met with the, see what happened, you know, let me tell you the history also. Basically our Prime Minister, they met with the MSME Association, right? They met with the MSME Association who highlighted many problems. Problem where that, you know, credit was not available. Marketing channel was weak. You know, labor law was complicated. And, you know, infrastructure better was needed. Infrastructure better was required. Skill development was one reason, right? So even a smoother exit policy for field business. So the task force divided this topic into group, right? What the task force did, you know, these are the topics, right? And they divided this topic into group, okay, and worked on recommendation for each group. They work on recommendation. For example, imagine that there is a small textile unit in a town. It has struggled with the loan approval, faces tough competition in the marketing, and lack a skilled worker. So the task force wanted to fix all these problems together, not just one. That's why they group it, and then, you know, they work on the recommendation. Now option number C says that to develop policies solely focused on labor law. It is again wrong. You know, labor law reform was just one part. Yes, this was one part of this, you know. If the task force only focused on labor, it would miss bigger issues like credit and infrastructure. Option D says that to provide direct financing assistance to MSME without any structural reform. This is also incorrect. Why? Because the task force did not give out money directly. Instead, its job was to study the problem. First of all, they would study the problem. After studying the problem, they will recommend the changes. So the correct answer to this question is option number B. So let's quickly summarize the keyword which we have discussed regarding the task force. So task force was created after the PM met MSME. First point I told you, PM and meet MSME association, then task force was created. The goal was to solve the multiple issue together. The goal was to solve the multiple issue together. It was divided into subgroup, right? This task force was divided into subgroup like credit, marketing, labor, infrastructure, right? Exit policy, skill development, and it was divided into subgroup for focus solution. Recommended setting up PM Council on MSME. So it set up PM Council on MSME, right? It was set up, right, to monitor the progress. So friend, remember the Pradhan Mantri task force for MSME was all about 360-degree solution. It was all about 360-degree solution for small businesses, not just one area. I hope this clear your confusion. Now friends, let's look at the next question that we have. The next question that we have is as you can see on the screen. So it says that what is the full form of CGTMSE and what is its primary objective? Very good question it is. CGTMSE full form and the primary objective is being asked in this question. So options are credit guarantee trade management service for enterprise to provide marketing support to SME. B. Credit guarantee fund trust for micro and small enterprise to provide credit guarantee to financial institution for loan extended to MSME. C. Credit goods and trade management services for entrepreneur to provide subsidy on trade loan. D. Commercial guarantee trust for micro and small entity to finance large scale industry with collateral security. I hope you know the answer very well, right? So the option number A is wrong. First of all, the full form itself is incorrect. CGTMSE does not stand for trade management service. No, this is wrong. Second thing is that it talk about marketing support. See, CGTMSE is not about marketing. It's about loan guarantee. CGTMSE is about loan guarantee. Like marketing support is given by other government scheme, but CGTMSE focus is only on finance. Yes, B number is correct. This is the correct definition. Credit guarantee fund trust for micro and small enterprise. Remember the full form. Sometimes question will be asked that what does E stand for? What does T stand for? So you should know the complete full form. And if you talk about the CGTMSE, let me elaborate a little bit about it. So you must know that CGTMSE, it was set up by MSME Ministry plus SIDBI. Remember, SIDBI is also involved in setting up the CGTMSE. What was the purpose? The purpose was to help the small business get loan without collateral. How? So bank normally ask for property or other asset as security. Many small entrepreneurs don't have that, right? Because bank, whenever these small businesses go to bank for loan, bank asks for something as collateral, and normal business don't have that. So CGTMSE give a guarantee to the bank so that even if the borrower fail, the bank is protected. This make bank more confident in giving the loan. Let me give you one example to make it more clear. For example, let's suppose there is a young entrepreneur and he wanted a 10 lakh rupees loan, right, to start a repair workshop. He want to start a repair workshop for which he need 10 lakh rupees note. But he has no land, he has no property to mortgage. With CGTMSE, the bank can still give him the loan because the scheme guaranteed it. I hope it is clear. Now, let's look at option number C. Credit goods and trade management scheme, completely wrong. And CGTMSE does not provide subsidy. Here it is just subsidy. No. It has nothing to do with subsidy. It is a kind of credit guarantee. Option number D is also wrong. Right. Large scale industry are not covered here. Remember, large scale industry, they are not covered here. And it is meant for collateral free loan. So the correct option is option number B. So what we learned from this question is that full form, first of all, full form is clear. Credit guarantee fund trust for micro and small enterprise. Second thing is that who set up? MSME and SIDBI. Both of them combinedly set up. The purpose is to help the MSE, not large enterprise. The purpose is only to help the MSE, micro and small enterprise, to get loan without collateral or third party guarantee. How it work? It worked by giving bank a guarantee cover, and it applied to manufacturing and it applied to the services, right? Remember it. And it is not about marketing and not about subsidy, not for larger industry. So friends, always remember CGTMSE is like a safety net for the bank so that a small business can get loan easily without pledging the property. Friends, if you are looking for a study material for this MSME examination, you can WhatsApp me on this particular number because we have almost 5 to 6 previous year memory question based PDF available in the course. Also, we provide you 2000 plus MCQs for practice purpose. Along with that, module wise quick notes, unit wise quick notes, which will immediately help you in your upcoming examination. And many people have qualified the examination using our material in their first attempt itself. If you want also to qualify using, increase your efficiency, having net low input and maximum output, then you can check out the course. The course link is provided in the description section of the video. I hope every aspect about CGTMSE is clear. Now let's see the next question that we have. Yes, very good question. This question asks you the definition of the angel investor. So question is regarding that as per the SEBI Alternative Investment Fund, we call it, in short, we call it AIF. As per the SEBI AIF Regulation 2012, which one of the following correctly describe an angel investor? So this question is regarding the angel investor, right? Option number A says that individual with a net tangible asset of at least 2 crore, excluding principal capital residence, or is a senior management professional with at least 10 years of experience, or a buddy corporate with net worth of at least 10 crore. Option number B says that any individual willing to invest less than 25 lakh in a startup without an asset or experience criteria. Option C, only venture capital fund with asset over 10 crore investing in large stage venture. And option D says that individual investor with net worth over 50 lakh irrespective of the investment experience. So if you look at the option number A, we question is asking about angel investor. Yes, option number A is the correct one. This one is the correct one, right? So remember some criteria. Let me explain. So this is the correct definition. First of all, and if you talk about the angel investor, so you must know that he is an individual, right? He is an individual. He must have asset worth at least 2 crore, not counting their home. Plus, they should have an experience. They require experience. Experience like invest. They must have invested in a startup before, right? Starting multiple business. They must have experience of starting the multiple business, right? Serial entrepreneur we call it. Or they must be in the senior management role. They must be in the senior management role for at least 10 years. If either of these, then they are called what is the term that we're talking about here? Angel investor. Okay. Now, third thing is that buddy corporate. Yes. If you talk about the buddy corporate, so that company with, so if for individual, this is the criteria. For buddy corporate, which have at least 10 crore net worth, can also be angel investor. Now let's talk about the funds. Even AIF, Alternative Investment Fund, or VCF. It is called Venture Capitalist Fund, registered with SEBI. They also qualify. So see, individual, in context of individual we have discussed, in context of buddy corporate we have discussed, in context of fund we have discussed. So let me give you one example to make it more clear. Suppose there is a retired CEO. Take the case of retired CEO of a particular company, right? He has 5 crore worth of asset and 20 year of management experience, so he can act like an angel investor. Similarly, a company with 15 crore net worth can also invest. So I hope the definition is crystal clear. Now the option number B says that individual willing to invest less than 25 lakh. This is completely wrong, right? SEBI rule is that minimum investment is 25 lakh, not less than that, right? This is the minimum investment, 25 lakh, not less than that. Option number C says that only venture capital fund with asset over 10 crore. No, angel investors are known for funding early stage startup. Remember, they fund early stage startup, right? And it is not limited to venture capital fund. Even individual, even corporate, they can also qualify. Not only venture capital fund. So this is also wrong. What about D? Any individual investor with net worth of 50 lakh. This is again wrong. Net worth is not 50 lakh, rather it is 2 crore, right? Plus just having money is not enough. The person must have relevant experience like a startup investing, entrepreneur, senior management, etc. Right. So let's quickly summarize the key point which we have covered in this particular through this question. I told you we are talking to the context of angel investor. So remember, to the context of angel investor, as per the SEBI has defined angel investor as follow. SEBI definition. So individual with asset more than 2 crore, excluding house, he should have an experience in startup, multiple business, senior management role. Right. Just now I given you one example of CEO, have retired CEO. Now minimum investment is 25 lakh. This is a very, very important thing. How much is the minimum investment for this angel investor? 25 lakh. Okay. And second point, that if it is a corporate, if it is a buddy corporate, then net worth should be more than 10 crore. And AIF and VCF registered with SEBI, they can also be the angel investor. The purpose is to encourage early stage startup funding while ensuring that investors are financially strong and experienced. So friends, remember, angel investors are not rich people with a spare money. They are experienced individual. They are institution with financial strength. Right? I hope this concept is crystal clear now. Let's see the next question that we have. Friends, do hit the like button if you really think that it is adding value to your preparation. Now, the question is as per, I think this question is repeated. Let me skip this particular one. This one is a repeated one. Okay. Now, which of the following is not a common symptom of a sick industrial unit? Very good question. This question is asked every time. Sick start. But question pattern only change, but you should know what is the meaning of sick industrial unit. So not a common symptom is being asked. Right. Options are in front of your screen. As you can see, persistent shortage of cash to meet day-to-day obligation. Option B, continuous increase in sale and profit over the year. Option C, decline in capacity utilization and frequent breakdown in the plant machinery. Option D, delay or default in payment of a statutory due such as taxes and salary. So let's start with option A. It says that persistent short of cash. This is definitely a symptom of sickness. Suppose let me illustrate it here. Right, let me illustrate this particular point here. Very important from examination point of view. Suppose there is a company, okay, and this company is always short of cash. This company, it is always short of cash, and it cannot even pay for daily expense like electricity. It is unable to pay for electricity, right, or raw material, or wages, right. It shows that business is in financial trouble. So imagine a factory that has to borrow money every week just to pay worker. That is clearly a red flag, isn't it? So this is the point. So persistent shortage of cash to meet day-to-day obligation. Yes, this one is condition. So option A is correct. Option number B says that continuous increase in sales and profit over the year. Yes, this is not a symptom. See, if the sales and profit are continuously increasing, the unit is actually healthy and growing. So this is not a sick one. So option number B is the correct answer to this particular question. Option C, decline in the capacity utilization and frequent breakdown in the plant and machinery. Yes, clearly this is a symptom. What is the meaning of this term capacity utilization? Let me explain. It means how much of the factory full capacity is being used. Every factory has a particular capacity. So how much of that capacity is being used, that's called capacity utilization. So if the plant can produce 100 units, suppose there is a plant that can produce 100 units, but it's only producing 40 or 50. So because of frequent breakdown or inefficiency, so it's clearly a bad signal. For example, take the case of textile mill with machine always out of order and worker sitting idle. This clearly shows the sickness. Option D says that delays or default in payment of a statutory due such as tax and salary. Another symptom of sickness. Yes, this is also another symptom. Healthy unit pays salary, provident fund, taxes on time. If payment are delayed again and again, it means the company is struggling with the finance. Right. So what we have discussed here, we have discussed some symptoms of sickness. Option B is the correct one. Remember, these are the symptoms of sickness: persistent shortage of working capital, decline in capacity utilization, and delay or non-payment of a statutory due, continuous losses, deteriorating financial ratio, irregularities in accounting. So these are the symptoms of sickness. Okay, so friends, remember, a sick unit shows sign of financial weakness like cash shortage, declining production, default, and if sales and profit are rising steadily, that is actually a sign of health. Now friends, let's look at this particular question. Very good question. It asks you which country is credited with the first implementing the concept of industrial cluster as an economic development strategy. Options are United States, India, United Kingdom, and Italy. Very good question it is. Which country started the concept of industrial cluster? So now many of you think of the United States because of the Silicon Valley. Yes, Silicon Valley is the world famous technology cluster where thousands of IT company, startup, research institutions are concentrated in one place. But remember, Silicon Valley developed later in the 20th century, right? The concept of cluster existed even before that. So while US is a successful example, it is not the first country to implement it. What about India? India is also industrial cluster. Like you might have heard of Surat. Surat is very famous for diamond, right? You might have heard for Tirupur. Have you heard the name of Tirupur? So Tirupur is famous for textile, right? Moradabad. Moradabad. You might have heard of Moradabad. So Moradabad is famous for what? It is famous for brass work, right? So friends, but India started this cluster development program much later, inspired by the international model like Italy. So India is not the pioneer. What about United Kingdom? Now the UK is called the birthplace of the Industrial Revolution. This is called the birthplace of the industrial
skill and institutions. Option number C, its primary mandate is restricted to developing curricula for primary school to ensure grassroots employment. And option number D, it acts like a regulatory body that enforces compliance and rigid corporate structure for SME and startup in Gujarat. Very good question. Let's have a look at the first what the question is testing? The question is testing you. What is the role of EDII? Right. That is the Entrepreneurship Development Institute of India. Right. What is their role? That is what the question is testing. Right. And it is strategic approach to the entrepreneurship development and how it is linked with the entrepreneurship theory. So the focus is not just on facts, rather how EDI build a sustainable ecosystem. That is what the focus is on. First of all, let's understand what EDII is. But remember one important thing, that EDII is not a bank. It is not a bank. Rather, so it does not give loan. So not a bank, so no loan. Right. EDII is basically training, research and institutional building body. So it is training, it is research and it is institutional building body. So if you look at the option number A says that EDII focus exclusively on for financing entrepreneur through direct loan. Is it correct? No, this is wrong. Actually, EDII does not provide direct loan. Founding institution are bank and financial institution, but EDII itself conduct training, provide mentoring, support capacity building. It never provide loan. What about option B? Yes, it is saying that multidimensional approach using EDP, incubation center and global knowledge dissemination. Exactly. This is the perfectly correct. Why? Because it run EDP. You know what is EDP? So question may be asked, what is the program called EDP run by EDII? That's called, Entrepreneurship Development Program. Entrepreneurship Development Program. It also operate incubation center like Cradle. Right. And it work in 100+ country. It support first generation entrepreneur. It support MSME. It support social entrepreneurship. Yes, B is correct. So this aligns with the resource based entrepreneurship theory. So sustainable entrepreneurship come from building a skill, knowledge, institution and capability, not just money. What about option C? So it is incorrect. It says that EDII role is limited to primary school curriculum development. No. EDII scope is much wider. There is a wider scope. It work with youth. It work with MSME. It work with trainer. Right. It work with policymaker. Here option C is wrong. What about D? D says that EDII is a regulatory body. No. It is development and promotional, not regulatory. It focus on flexibility, support, skill development. It does not enforce any law or compliance. So option B is the correct answer. So trick to remember is like this. You can remember it like this. EDII is equal to T plus I plus K. T means training. Like EDP. EDP is a form of training. I means, incubation. So for incubation, one program I have mentioned like Cradle incubation, and K is the knowledge. K is called knowledge, like global research and dissemination. Remember, EDII built entrepreneur, not balance sheet. So when it was established, 1983, promoted by IDBI, IFCI, ICICI, SBI. Role is training, incubation, research, global cooperation. It does not give loan. It is based on resource-based entrepreneurship theory. So I hope till now everything is clear. The remaining portion will be covered in our paid course. We have